As we look ahead to Jackson Hole and the signalling event that is likely to be for the markets, what are you expecting to hear in terms of any conviction on whether they could go 25 or 50?
So they probably will not guide to 50. I think they'll leave that for the data. So they'll put that in their back pocket. I think they will continue to say that they are concerned about the sustainability of inflation to the 2% target, but that on current trends, they'll be able to do 25. I think that's the guidance they'll give is 25. And if things weaken between Jackson Hole and the next meeting, then they'll have the option to do 50. But to set the target of 50 is really setting themselves up for a failure.
Got it. And, you know, you've got one eye on the macro situation over in the US, but it looks like from your notes, you're also keeping tabs on things happening over in Europe. And we did get some data out of Europe this week. How are you looking at that right now?
So our case for Europe is that it's a better value than the U.S. So the European markets are on, say, 14 times, where the U.S. is on 21 times earnings. Obviously, the U.S. is growing more strongly than Europe. It probably has more secular drivers like immigration and higher productivity than Europe. But having said that, there's a certain, valuation gap which is now very much in favor of Europe. So in our work, we think Europe should trade, say, 2 multiple points cheap to the U.S. So if the U.S. is 21, it should be 19. But at 14, that just represents an extremely good bargain. So for us, it's a way to be exposed to equities with a margin of safety.